Hi everybody, Jay Pace here from Providence Property Group with a market update for the month that was May 2025. For those of you new to the channel, we are a national buyers agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere, turning dreams into addresses. We help you to be a player in the game and not a spectator when it comes to your wealth journey, focusing on quality properties over quantity. We've been operating through 3 decades and our experience will ensure no sleepless nights worrying about the property market. On this channel, we talk about all things property, but most importantly, I read the news and separate the fact from the fiction so you don't have to. Let's get straight into the data. Okay, so this is the Hedonic Home Value Index from the 31st of May, so we can see the data is all there. And interestingly enough, in regards to the best performers for the month, we can see Perth at up 0.7%, Brisbane up 0.6%, and then Sydney up 0.5%, with Melbourne and Adelaide actually tying at 0.4%. Now, obviously, you can see some good performance with Darwin at 1.6% for the month, but again, Darwin, Hobart, Canberra, these other capital cities that are kind of outside the main top 4. We don't really focus on them too much in regards to the volatility of the growth that we do see there. And you can see from an annual perspective, Perth is still up 8.6%, now tied with Adelaide for the past 12 months, which would have been from the 31st of May 2024 to the 31st of May 2025. We can also see Brisbane up 7.1%, coming in 3rd place, or really the second place with the distant, with the two 8.6s in front. All right, this is important. So what we want to look at now is we want to look at the speed check for the market and how quick the market is going. In alphabetical order, we've got Adelaide currently up $71,000 for the past 12 months, or $1,400 per week for the past 52 weeks. But that is slowing down from what it was the month before, which is why you've got a red indicator on there. Then we've got Brisbane up $65,000 for the year, currently $1,250 per week. Melbourne has continued its uptrend actually, and the indicator has been green now for about 3 months in a row. And what we're seeing still negative at $9,500 for the year, or $200 per week. But Melbourne is an interesting one. Melbourne's on track to hit 9 million people by 2050, overtaking Sydney and becoming Australia's largest city. This growth will demand 1.6 million new homes, 1.5 million new jobs, and infrastructure that can support 10 million daily trips. That is an 80% jump from what they currently have at the moment. So just keep watching Melbourne. I know I've been talking about Melbourne for about 1.5 years, but now we are definitely seeing the green light and we're all in. Let's go to Perth now, up $70,000 for the year, or $1,350 per week. Sydney up $13,000 for the year, or $250 per week. All right, now just a quick look at the 5 and 10 year periods. Again, this hasn't changed much from last month. The only thing that I continue to see that's changing is the past 5-year performance with Melbourne, as that's now above 8%, which we started last year sometimes, and sometime now it's up to 12.8. So Melbourne's definitely having that resurgence. From a rental yield perspective, rental yields haven't changed. We've got 3.5% across the combined capitals, and as you can see, Sydney still has the lowest rental yield percentage at 3.1%. Brisbane, Adelaide, Melbourne all tie at 3.7%, at Perth at 4.3%. So if we take that average 3.5% that you saw before, and we use the median dwelling value currently across the combined capitals at $911,537, and we times that together, we get a $31,903.79 income generated from the property. So that's your income, that's your rent. Then we have to take away the cost of holding that asset. Now, obviously, there's strata, there's rental management fees, insurances, etc. Let's forget about those for a second. Let's focus on our biggest holding cost when buying an investment property, and that is going to be the interest component that you're paying to the bank to hold onto the asset. Let's assume it's 6.5%. I'm seeing a lot of interest rates out there being offered by some of the brokers that we work with in the high 5s. So if you're above 6%, make sure you speak to your broker. Based on that 6.5%, that's a $59,249.90 interest component per year that you're paying. So if we have the interest and then we take away the income that we've obviously received, we're left with a $27,346.11 negatively geared property. That's per annum, or $525 per week. Again, I haven't taken a few other things into account, and this is assuming you're doing a full 100% borrow, so you're using equity, not cash. Now, despite the uptick in new listings, total listings have continued to ease, and they're down 2.1% from last year, and they're actually 13.2% below the previous 5-year average. So the June 1st data is reading its lowest national count for this time of the year since 2007. So anyone that's sitting there going, oh, I'm just waiting for more property to come on the market, where's it coming from? Who do you know? Do you know a secret I don't? Because I'm not seeing it. And then, if we're talking about people who are going to build more property, let's have a look at the current dwelling approvals. So Australia's population is growing rapidly, and the data that we're seeing here is still that we are below the decade average for houses, and we're significantly below the decade average for units. I've said it before, and I'll say it again. People have been... What's a nice way to say it? People have been dissing on units for quite some time, not liking units. But I'm telling you, the unit resurgence is coming, and you're going to start seeing units outperforming houses quite significantly because of location. Now, let's have a look at some recent purchases that we've done. So we got this for a client in Ryde. So it's actually the Ryde LGA. It's not Ryde specifically. This is a well-maintained 2-bedroom unit. It's situated at the rear of a secure low-rise complex. There's only 8 units in the total of this dwelling. So that offers privacy and tranquility. If you're buying a unit for an investment purpose, folks, this is where it's at. No amenities, okay? No pool, no gymnasium, no elevator, no basement car park, just bricks. That's what you want, something that's going to have the lowest maintenance possible. Now, this property, I think this is an absolute steal. And my boy Joe that purchased this for the client should be absolutely wrapped. So even though, you know, we bought this for an owner-occupier, let's take a look at the numbers. So a lot of people have dismissed units as investments for a long time, and the Australian media has done a great job of making you think units are the worst investment ever. But let's actually examine the numbers. So the average unit price in this area is $684,000. Don't worry, we got this for much lower than that price. As I said, Joseph did a great job with his negotiation. But also, I want you to have a look here at the 12-month change. So I've got houses and I've got units. This is the same suburb, okay? The data on the same suburb. Houses are worth $2,319,000. Units are worth $684,000. That's the average. Look at the 12-month performance there, okay? Look at that here. You've got 12-month performance. Houses have lost $31,000 in the last 12 months. Units have gained $44,000 in the last 12 months. Why? Why is that? Well, people are starting to realize that there's value in units. They're also realizing that why would I continue buying further and further away from where I want to be? Because everyone tells me, oh, you don't want a unit, you want to buy a house. But I also don't want to be in that suburb that's another 30, 40 kilometers away from everything I know. So I'm starting to compromise, and at least I don't throw away everything I've grown up to know, and instead I'm keeping the things that are familiar to me. And that's why units are going to become a hot ticket item over the next couple decades, I guarantee it, just like they are in every major capital city around the country. Let's have a look at the inside. The inside's actually quite nice. It's a solid build, very homely. However, you know, there's plenty of potential for internal renovations and some modernisation, but it is very nice. This is the living area and the kitchen area, which you can see there, and the dining side. It's got an expected rental income of $600 per week. Now that's 5.4% gross yield, which is above the average Sydney unit, which is at 4.2%. So to get 5.4 over 4.2 is a massive win for our client. The balcony's nice. The train station's less than 300 metres away, with a new shopping precinct opening up just a short walk away. Now, let's have a look at the numbers here. It's 17 kilometres west of Sydney CBD. We got it for $575,000. I was actually quite jealous of this purchase. It's like working in a candy store when you're working at a buyer's agency. You see all these properties, you're like, oh, I wish I could buy that. I wish I could buy that. $575, great price that Joseph got this for. $600 rent per week would give you 5.4% rental yield. We love it because it's a classic case of buying for potential. It fits the brief. Strategic renovations would definitely change this quite significantly, but it's perfect for the client who's currently wanting to live in it for the next 5 years before he upgrades. This is Melbourne. So our expert buyer's agent, Ben, secured this fully renovated property in Melbourne's west, approximately 7.5 kilometres from the CBD. It's situated in a quiet cul-de-sac with no neighbours on one side, just a beautiful park. It's really a great buy, this one. I mean, look at that. You know, the house sits on a 446 square metre block. It's deceivingly large, actually, when you look at it. And you can see the park that borders one side of the fence there. It's completely renovated, so really nice internals, ducted air conditioning, downlights, floorboards, everything. Really nicely done. No one's actually lived in it since the house undertook extensive renovations, which definitely does help the client because they can claim that depreciation. Fixtures and finishings are all top quality, and I love the bifold doors to the deck. They're expensive, they're nice. I've got some at my place. They're really beautiful. Now, the rear deck, it's quite spacious and perfect for entertaining. The garage at the rear has its own plumbing, water, and sewerage system. So that could actually be transformed into a granny flat in the future. So there's some potential there as well. Again, why do we love this? 7.5Ks from the CBD, $1.3 million purchase price, lots of value for money here, $750 per week or 3% gross rental yield. Melbourne is notoriously known for its lower rental yields. I know it's above average in regards to the 3.5 that we typically see, but trust me, when you look at Melbourne prices, typically the rental yields are a little bit lower. But if you can weather the storm for the next year or two, I'm telling you, there's going to be significant capital growth, and you're not going to worry about those extra couple $1,000s it might have cost you over those few years. So good land size, great suburb, low maintenance, depreciation benefits. It's going to attract an above average yield, and it's right before capital growth. Yes, I know this picture is terrible, and that's because this home was built 11 years ago in 2014 for owner-occupiers, and my Perth team snatched it off the market before the selling agent was even able to get photos done. So this is a Google Earth, this is a Google Street image. My team is very quick. I believe legendary NASCAR driver Ricky Bobby once said, "If you ain't first, you're last." And that's the only speed that my Perth team knows. So good on them. They did a great job with this, and I'll show you how great a job they did. All right, so if we have a quick look at the numbers here and why we love it, it's 25Ks north of Perth CBD. I actually own a property in this suburb. I'm not going to tell you which one it is. If you watch a few of our previous videos, I do mention that and the suburb name. Purchase price was $725,000. It was under market value. I grabbed a valuation estimate from CoreLogic, and if anybody knows CoreLogic and has seen the system, or has anybody that has the system, they'll tell you that CoreLogic underquotes all the time. So to see that this is at 740, and that probably being an underquote, getting this at 725 for our client, we know there's great value there. Rental estimate between 740 and 780, about 4.9% gross rental yield, which is again a fantastic rental yield. It's young, it's a standalone home, 480 square meter block, purchased below the median house price at 751. Great job, team. Okay, my boy Tyson got this. He was able to secure this great value house on a huge 650 square meter block just under 20 kilometers north of Brisbane CBD. This is actually my favorite one that we bought that month. I'll show you why. It's a classic Queenslander, and I've never loved the Queenslander style, just my own personal preference. It's never been something I've gone, oh, I really like that design. But I've got to tell you, it's a classic Queenslander design that's been tastefully modernised. So we've got like pendant lights, they've updated the floorboards, they've got glass balustrades all around, that's both internally and outside. They've redone the balcony here. You can see the flooring's been redone. Balustrades are all glass, a lot more natural light here. Just really done a really good job. Even the doors to go outside, they've updated. The rear elevated deck is large. It's great for entertaining. I actually really love this. They've updated it with downlights and everything too, so it's quite beautiful. The backyard is massive, and it's got a huge garage/shed in the back. One of the things that I think is pretty cool, like I'm not a golfing enthusiast, but even I could see myself practicing some putting on my own personal putting green with 3 holes in it. I think it's pretty cool, okay? So it's 18Ks north of Brisbane CBD. The purchase price was $1.1 million. I mean, that's just great value for money, isn't it? $785 per week is the estimated rental yield, about 3.7%. Great value for money. Land, land, land. Owner-occupier appeal with development potential. Neighbouring, more expensive suburbs right next door. Just a great buy. So Thank you so much for taking the time to have a listen to us today. Remember, we can't help you until you commit, but once you commit, we won't let you fail. We're bringing two things together here: your desire to build wealth and our 18 years of experience of buying property. So for more than 3 decades, Providence have placed Australians into the right properties all over the country. We buy unique quality assets in areas where demand outpaces supply. We focus on properties that have owner-occupier appeal, which is much larger than the investor appeal of only about 30% buyers being investors and 70% being owner-occupiers. We buy in the right capital city at the right time, guided by the economic property cycle. If you want to know more about the cycle or where we are today, jump on our YouTube channel and you'll see plenty of videos on that. Thank you so much. If you have any questions, give us a call. Have a great day.